Hey traders, I hope you had a good Wednesday today in the markets. I myself didn't take any trades. Usually Wednesdays are like that. You just kind of let the momentum of the market continue on. But there was a good trade today, actually. There was a trade that I got an alert on in the zombie hour, which what people call the afternoon, because typically nothing happens. This was on the SPY today, the S&P 500 index ETF, which a lot of people like to trade. And I was at the gym, unfortunately. Came through on my cell phone, but not much I could do about it. Here's what it signaled me for. I've got TradingView alerting me to this particular pattern, and it's done very, very well for me all year long. It took me about a year to develop it and come up with it. And I'll go over it in more later videos. But what it's basically doing is looking for a bar like this. Now, what is this bar and why do I have it highlighted? Well, if you see here in the past, these little bars right here came up and established what looks like highs of a resistance. And then this bar here pierced it, spiked above it, and then closed back down below it. In addition, it also closed back below this 9 period line that I have right here. Really simple. And what some people call a shakeout or a stop run, if you've been trading long enough, you've gotten caught by something like this before, where you might have your stop just above what you think is support resistance, and it takes it and then goes the direction that you want to go. That's basically what I'm playing. I lost enough money on this, so I made a strategy around it. It's just that simple. But you can't just take it in isolation because price does these little volatile moves all the time. So you need to use it in conjunction with something else. And one of the things I've been trying to collect examples of is the 50% retracement level. And I'm going to show you what I'm talking about here. So this was Wednesday. And so let's zoom out and let's see the week's price action. And this is the week we're in. November the 9th started us off, opened up gap high, very high up here. And then we came all the way back down to a low on Tuesday near the open. And so that's the price action of the week thus far. So I'm going to use the fib retracement tool to find the 50%. Now, a lot of people have baked into theirs the different Fibonacci levels. I just try to keep things really simple. I don't say that they're not useful. They can be very useful when used in conjunction with past highs and lows and things like that. I just try to keep things simple to 50%. And so if we look at this price action for the week, which everyone can see, and we draw a line and see where that halfway point is, boom, right there, right where we got this signal. And it sure enough ended up being a pretty good reversal signal. And so what I would have looked to have done in this case is I would have looked to have taken a little pullback off of this signal to basically the halfway point, the red line, a stop just above it, which keeps the risk very low, and either a 2-to-1 or a 3-to-1 would have been a really nice reversal here. And sometimes, if you put your stop up this close to the last high, it's going to get blipped out. But the whole premise of this whole spike is that I'm trying to capture where that's already happened, where it's already spiked out, run the stops, and now it's set up to reverse. And so I don't want to take it by itself, but when it happens at something like this, a halfway point, a 50% retracement of a much larger move, that can be a powerful reversal signal. It can definitely help increase the probability of entries and exits. Just as a little extra bonus of study, let's look and see where this stopped. So basically, this move off that 50% level came down to about right here. And where's that match up with? Well, it matches up with these past highs and lows, a little bit of an inflection point right here, which is another thing I've talked about in past videos. And in this video, when I'm talking about the 50%, I'm going to add this to my collection of examples of how powerful that 50% level can be for finding tradable levels. And so if we look at the range for the week itself on the SPY, we get the low from Tuesday right down here, and we get the high from Monday up here. That's the large range of this week, which will probably come up again in the future. So definitely be looking at these levels. But also now going into Thursday and Friday, we can see where price is respecting for the shorter term range. So be watching this in your trading coming up this week. Hope you guys have a great Thursday and Friday, and keep your risks low and your wins big. We'll see you in the next video.